morning.
Hey.
How are you?
Just go to the weekend.
That good, huh? Man, I just watching this from afar, it just looked like, man, I was like, holy cow, this stuff is swinging everywhere, man.
Yeah, this is definitely within the category of there are better times to trade, and this is not one of the good times.
Yeah, I would say just by looking at it.
And just knowing that, I mean, we have no clue
What's going to come out next.
Yeah, or when. And that's like, there's not like a, hey, here's a planned release or statement. It's just, here's where we are.
And then that tweet comes out and he runs at 30 points.
Yeah.
How about that?
That was amazing.
Golly.
All right, so we got IB high here in the NASDAQ. Well, average IB, nothing significant here. Yeah, it's
Hey, did it snow out there?
It did.
Yeah, that's funny.
It did.
It's crazy, isn't it?
Yeah, everybody's projecting their opening days and.
Oh, really? Wow.
Yeah. Interesting. So we got these single zones up here from prior auction. There you go. Push it up there. Go ahead. Right into the 5-day. Or the 20-day, as it were. Although they could, I mean, we could trend this thing all day long.
Yes, we could. Yes, we could.
And everybody will go, I can't believe it went there. And you're like, well, it totally can. So, okay, so 1.5, it gets us 79.20. And 2 times it gets us around 79.44. All within the realm of possibility. Let's see here. Now, while I say that, there is some risk to all of this. One, we've just got back to the 20-day or monthly value, and what I mean by that. Good morning, everyone. Good morning. Good morning.
Good morning.
We'll do a little. I mean, we've gone 200 points since Thursday's low, the Globex evening low. But here's the most traded price the last month. We just got back to that. For the last week, was significantly below us. We're also pushing up against. We're pushing outside of 2 standard deviations of the weekly VWAP. So that's kind of a statistically stretched price. We're getting close to 2 standard deviations of the monthly VWAP. So, I mean, those are places where those algorithms can start to kick back in because they see those as statistically exceptional prices. So don't be surprised if we see some kind of release that pushes like, 79.30 and everybody jumps on and they immediately reverse it just because of where we are relative to those statistically significant prices. And it's something we've actually been looking at more and more this year, just as we have been more news driven, and as those algos run the price action, it's something to incorporate as part of your plan. It's been kind of one of those where like, okay, why are we moving at this? why is it at this price? Why is it doing that? And then you go and you find out, oh, it's because they're seeing this as statistically significant, and so we're watching that. So even though I don't see any reason to be short, I don't see a reason to be short. I am cautious of being long up here. The fact that we've got back to this area of value for the last month to slow the auction down and pause. Typically, when we get back to monthly value without pulling weekly value with us, you can see just even for the last week, we've got the biggest volume this week on the daily chart here is way back down here, and you can just see how thin it is up here. So this is not advantageous trade location for long by any stretch of the imagination. So it's definitely a place to stock shorts. The problem is it may not come till Monday or Tuesday. Uh, we have Monday is holiday, Asia's closed. Um, we may not get an announcement till after the close today, so there may not be some kind of reaction until Sunday night, to be quite honest.
That's my guess too. Is they're gonna wait on this? Somebody's got to be in his ear right now.
Yeah.
At least I hope so.
Um, still lower low for the month, but there's still time that they could actually even engulf this month and really push it higher. So that's part of what we're going to look at today around opportunities. But before we get much further into that, let's just kind of do some introductions for anybody who's joining us for a first time. Real quick, reminder that in markets, there's really only two things that you have absolute control over as a trader. One is risk. What are you willing to risk? And the second is, where do you seek to put that risk on? What price are you going to engage that risk? You can, especially within futures, you can lose more than you had initially invested if you're not careful. Please don't do that. Please respect the risk.
Yeah, please don't do that.
Please don't do that. Number of ways that you can approach markets and find opportunities, and that are all effective. You have to be honest about where, what framework you're coming from. There are fundamentalists who look at balance sheets, they look at economic reports, they look at supply and demand, kind of macroeconomic ideas to generate potential ideas. Technicians look at specific price action patterns without so much respect to fundamentals, and we're behaviorists as profilers. So we're looking at the two indicators that absolutely every market participant looks at, and those are price and volume. And we are seeing how is the auction behaving around those two indicators of price and volume. And the profile simply allows us to arrange that information so that we can make better decisions. This is me. I'm Josh. I'm the founder of Traders Profile. With me as well is JP, and we're kind of the core of our development team. And we are a skill development firm. If you are not yet consistently profitable in markets, we're a great team to engage. And that's our aim, is to get you to consistent profitability. From there, after you get to consistency, then you can go on to do additional work to work on your sizing and work on your breadth across multiple markets. But if you're not consistent first, you have no business working on size, and have no business working on lots of breadth. And so we work on consistency through something we call our profile trading development pathway, which focuses traders on these three objective ideas. Is that to be consistently successful in markets, because there's no guarantees. It's not like input A will always get me output B. Sometimes input A gets you output Z, and that still is the right trade to take. So there's far more art to this business than there is science. But there are objective ideas that we lean on, and one of them is the 4 behaviors observable in every auction and how to observe them. Every auction has a beginning, it has a move, there's a rest, and then there's a test. Those are the 4 behaviors. There's 4 questions that we ask and answer before we ever put on a trade. What's the opportunity? What am I willing to risk for that opportunity? What would tell me that I'm right, and what would tell me that I'm wrong? There's 4 stages of auction competency. You need to know which one you're in. Are you in stage 1, which is an unconscious incompetence, whereas you don't know what you don't know? It's not a bad place to be. In fact, you can do a lot of significant positive work as a trader in development if you know that you don't know things. Vulnerability is an incredible first step towards getting consistent success. To a stage 4, which is a unconscious competence, where you've worked so hard, you've put in the diligent work, you have a process you can lean on, and that has led to an inhabited competence that you can work from instinctively. Where all of these overlap is where we typically find consistency. And how we put that to play every day is we have these auction concepts that we put together into something we call a trade plan. And that's where we're looking at all of the ideas around the components of the auction and putting that into practical use. and looking for trades around that. So we can talk. I'll get a little bit of push. Nice. Just hang on a second, guys. Just take a little bit of a scalp here. Just a couple nickels, a little hype. But with that, we have welcome to take any questions. Anything, platforms, products. Wanted to talk about a couple things this week. First off, this week's been a really tough week. We knew it was going to be a tough week, and we encouraged, especially traders in our community, to not be as active. Although we've had some good trades this week, we've definitely said, hey, let's wait. We knew that this trade deal was coming, and even today, on a tweet, okay, a tweet that said nothing. It said there's good progress being made. The NASDAQ moved 30 points in 1 minute. Okay, gang, if you're new to markets, I need you to know that there have been years where we didn't move 30 points in the NASDAQ in a week. Seriously. So, that's a significant, that's $600 on a one lot on the minis of P&L, either for you or against you. So that, it goes into the risk thing. And we don't know when these things are there's going to be some announcement at some point today where, Trump's going to announce something about the trade stuff. Again, there's actually been no deal. We've moved 200 points in, JP, 48 hours? 100 points in the ES
Yep.
on no decision, no deal whatsoever.
That is going back to what Josh said before. That's just monstrous.
That's monstrous ranges. I mean, we've had historical months when we have not moved that much. So, recognize that this is an aspect of context. I know traders talk about context, but while we're not fundamentalists and we don't trade off the news, like we're not making directional bets based on a deal or no deal in China. What we are recognizing is that that's new information into the auction. And how is that relevant? The auction process will move from value to value. Like that's how the auction works. It will move fairly predictively that way, unless there's new information injected into the market that changes quickly perceptions of value, and then they have to reestablish those. So that's what a tweet or some type of economic release does to the market, is it momentarily resets the value parameters, and so the auction has to go back to a price discovery process to reestablish where value's held. Okay, so when you know that you're going to have lots of those events, it's prudent and wise as a trader to one, if you don't have to trade and you know when those events will be and won't be, steer clear of them. Today, the plan coming in was to try to be active earlier if given the opportunity, because more likely we're going to get some release later in the afternoon. And when that happens, it'll be wicked, it'll be fast, and you won't have time to react to it. So do it. Look to have your activity when there is greater predictive probabilities. It's kind of like when you have an FOMC, which is typically released in the middle of the day. Although now that Chairman Powell's been doing his interviews later, it's really kind of taking us to the close. But where it used to be, where it was just a release and not a Q&A after that, we could wait half an hour, and that initial price discovery that took place during the release was done, and then now you can kind of go back to the typical auction process, which is looking for price and value. And so right now, here's the NASDAQ. It's basically trading at value for today in the current session. Value for the last week significantly lower, and we just tagged and established monthly value. And that when I said I was just taking a scalp, what I was just taking is I was just taking a little responsive bounce off of this high volume node back to the current day value. So that was kind of the window of about 7 points. Okay. But now I'm back to the sidelines and I'm waiting. As far as other opportunities that I'm looking for today, just real quickly, because I've got crude oil, NASDAQ, and soybeans. So crude oil has actually broken out of a range that we've been tracking for a while, from 51 to 54. So this has kind of been the playground. You can see the very pronounced value right here, and moves begin from value. You can see that monthly value is significantly higher. So this is putting crude in what I call ping pong land, where if you're closer to the 5, the weekly value, you're looking this way, and if you get up closer to the monthly, you're looking for it that way. And when it's in between these, you can be doing this activity. But this is the overnight inventory. We're trading still inside of that, and we have a very prominent value reference from yesterday. And we opened with a gap. We've now closed that gap, but we're still inside of the overnight range. There's a 97% chance that we're going to see either overnight high or overnight low during the session. We just don't know which one. And if we take out the low of the first hour, I will be looking for rotations up towards 54 to push for 53.22. If we take out the high, then I'd be looking for pullbacks to 54 to push toward this decision level up here, and then also overnight high. So that's the idea left in crude oil. And you notice that there's if-then statements. So if this happens, then I'm waiting for this happens, before I would actually execute. On the NASDAQ, we've taken out the initial balance high. I'm not looking to go with the extension higher because of how far we've gone. Also, notice that there's some impulsive movement lower overnight. That these single prints, that could be structure. We do have a very, very strong open type and what we call an open drive open, which was predictive of the IB high extension and the move toward monthly value. If we could push up into these areas, specifically up to like 79.27, maybe even 79.40, I'd like to see some failure back toward these references later. So that's really kind of the idea that I'm interested in. The more they can stretch this before an announcement, the more they're pricing in an announcement. And there's likely to be some quick squeeze on positive news and then a reversal. And so that's the idea there. Conversely, if we trade back through the open, which is a very strong directional open, then these holes become targets back toward 77.50 area. So you can see none of that stuff's happened yet. So there's, we're just in wait mode. Finally, I've got soybeans over here. We had WASDA report yesterday. We actually attempted a short, and what we were interested in was that monthly value for beans is way down here. Weekly values here at 914. And after the release, we traded higher, came back through the scene of the release and closed on the lows. So we're looking for a swing short down here to 914 for about the 926 area, had stops above the high, got stopped overnight. Now, so looking for potential re-entry short on soybeans, but so far we're trading above the open, and we do have higher prices. So unless we see some seller step in, there's no trade. We're actually still inside of the overnight range there as well.
Beans have been great the last week, right before this thing, man.
Yeah.
Right to the number that we talked about last
Well,
week.
and the other thing to watch about the beans, why I'm not like aggressively wanting to short, is this is the long-term chart in the beans. And notice that we're right up against the top of a long-term bracket. If we break out higher,
Ooh-wee.
You're looking at like 956. You could, see the swift move back here. We could move above that. So I want to see some significant rejection of higher prices before I would start to get short. That's where looking at the longer term really helps you stay on the right side of the trade. So
yeah, the MK, you're right. The ranges were miserable in the ES a couple years ago, 4 to 6 points. That's actually a scalper's delight. Not what I would call good. But NG, natty gas. I don't trade natty gas, so Josh, you want to look at that?
It's definitely a seasonal trade.
Yeah, it's a thin market.
A lot of people look to still trade the seasonal market of, let me clear off this composite here. So natty gas is the other energy product that people look to trade. Make sure I'm on the right time frame here. Yeah, daily. Has had a significant move lower. However, I'm going to guess if I look, we're coming back into an area of inventory that if they can get acceptance above, could lead to, we got IB high in crude. Hang on a second. All right, so we got IB high in crude. So again, per my plan, I'm looking for pullbacks like 54 to be long for 54.66-ish. So let's keep an eye on 54 to the downside. If that comes before we get up to that 54.60 area, I'm interested. But this is kind of a a seasonal play where you can look to play natty gas, especially as you go into the winter, and prices they typically rise. If we look at where they just recently moved, and they're actually below value if you look at kind of the last 9 months. So there's a potential opportunity, I think, in natty gas from, if you can see a trigger from like 231 up towards 260, and that would be the swing trade. Let's go look at on a short-term chart what they're doing. Since I don't have it. Yeah, so actually some fairly decent order flow coming in today. Nice excess. So see the push lower here on this 30-minute period that then rejected back towards the open, and then you saw some buyers stepping in. So I mean that's actually the type of behavior that you would lean against for risk. It's going to take the auction quite a bit to get back through something like that. So what do we say? We said 260 was kind of the upside target. So anywhere in here, pullbacks are opportunities to be long stops below 218. I actually really like that. Okay, what month are we looking at here?
I'm thinking if you're doing that, probably want to look at the option side of it. Is that what you're thinking?
Well, their options are not the best.
It's because it's thin market. We just
It's
have
real
no volume.
thin.
Yeah. So that's why I don't trade it. It's just too thin. I mean, it's nice if you get one going that direction because you can make lots of money quickly, but you can also lose lots of money quickly.
Yeah.
Peter has a question. Peter Valeri, what's your ES analysis? That's a great question. I would think at this point, if we can hold above, Josh is going to pull that chart up for me. Are you still working on NG?
Yeah, I'm trying to find which one I want to be in.
Second, Peter, we'll get to that one.
85,000. Let's see.
Yeah, I see that 92 and that November contract. That's
yeah,
not a lot of contracts. Depends on what strike those
that's,
are sitting at.
That's not bad. Yeah. That's why I just did it outright. So 18 days. So here you can see they're already expecting higher prices later on. As we get further into the winter.
Well, again, seasonal, like you mentioned.
Again, yeah, it's seasonal.
You can, I mean, some people play that seasonal. They play that seasonal card, every year, and it looks like a no-brainer. However, it's not always that way. Just be aware of that. So.
Yeah. All right. Okay. Now we can go back to ES. So this 30-minute chart on the ES, I mean, I'm expecting, well, here, a couple things. Let's go back over here. If you follow us on Twitter, I've been posting a view that I've been watching a range that we have been in that we broke out of today. And we are so far holding, which I would say, you know, all things being equal, would lead us to 3K at least.
Yeah, and that at this point, what we talked about in the video is that if we get back above that level, then all-time highs are probably, you know, they may test them. And you know what? To be honest with you, hold on a second. Let me pull up my chart here and look at this for a second. We're trading at 30,000. Yeah, all-time highs are up around 30.24. Was it 30.24? Is that right? No, 30.29. Sorry, we went to 30.24 last time. So now we have to hold these levels that we just broke out of. Okay, if we do that, then we can take a shot at 3,000. Honestly, all it takes is a tweet today, and 3,000 is in the book today.
Yeah, done deal.
If that's the case, we take out last week's high, and if we close above last week's high, that's significant. Then
Yeah.
the next leg is 30.24, which is the last swing high, and of course 30.29, which, I mean, that could happen next week. We don't know. So
Now, as I imagine in the question of the analysis, I mean, so you're hearing us put out levels that are significantly far away. We don't know when we might hit those. And inside of that broader narrative of where we believe the auction is going, we're looking for that, and then we'll look to see if and then we would approach those certain levels. How does the auction behave around those levels, and does that fit one of our setups? But as it stands right now, you know, for example, one of the things that we might look for today specifically, given that you've got a gap in the ES, you've got, you know, this strong directional open, fairly wide. You're coming up into some volume that could slow you down. We might look for them to, you know, extend and then rotate back lower. However, given the fact that we're near prior week's highs, we're near all-time highs, and we're waiting for some tweet, that could just blow through the area that we might look for rejection.
So to Josh's point, real quick, one thing that we tell the team is, you know, patience is you have to be patient in this game. Don't, like this morning, if you were trying to look for a short off this morning, it was painful for you. So so just stay patient, wait. You know, there'll be better times. Okay, like we said, this week was probably not a great week to trade, and we talked about that early before back in our weekend analysis for the team and stuff. So you just have to be patient coming and stuff. You know, some days you won't make money, some days you won't take a trade. Okay, and you know that's okay. And once you understand that, and understand that your money's going to come at certain times, you know, the game will change a little bit for you. So just be patient in these times. Don't go looking for a trade and try to manufacture something that's not there. So
yes, and amen.
Can I get an amen? Amen.
Amen. Amen. Amen. Yeah, it's, I mean, let's just look at this and let's analyze this a little bit better here. Just get a picture of kind of what's going on. Get this down to a 30-minute. You know, so we talked about behavior. So again, here's the overnight. This is the overnight inventory. Some impulsive moves in here as we were breaking out. Likely running some stops that were surprised, some layered stops in here, defending this bracket that we just broke out of. Overnight value is here. We tested that on the open and immediately, I mean, we just drove straight from it. This is what we call an open drive open. It's a very strong directional open. The delta, so this is the difference between the trades placed on the bid versus the ask. On this platform, a negative number is positive delta, and we've had nothing but positive delta. So 9,000 A period, 5,300 B period. Now in C period, we've had some negative delta, but notice what that likely is just some profit taking. It's not a turn. How do I know it's just profit taking? It's because, I mean, look at, until you see enough selling pressure come in that counters the buying pressure, it's just profit taking. It doesn't turn the control at all. Now we've extended the initial balance high. We've also progressively migrated value higher as the day has gone on, which suggests that we still have room to go higher. We do not have much rejection high. This profile is what we would call a P profile, and specifically when an auction has been moving higher, as we have been since Thursday's low, that's indicative of an auction that's incomplete to the upside. To which you might say, okay, well then I'm going to look for an opportunity to go with this, and I'm going to look too. So the question is, first, where? What would be the price? So you'd have to be targeting that prior week's high, 29.97, 3K. And then, the next question is like, what are you willing to risk to do that? It could be reasonable to risk the B period low and be long here. And as long as the order flow stays in that favor, I'd expect that we move this direction. The contingency would certainly be that we could have a news event at any moment that would inject new information into the market and change things. But this is what we're talking about, of that the typical auction process. This is how it works. We don't have any unfair highs yet in the auction. We've got a skew in the profile to the upside, so that suggests higher prices. And that's the expectation, unless it's acted upon with a equal or opposite force. And you can see now after the C period, had a little bit of selling, we're now back to the buy side. So I would, if I was long here, I'm not long, I would be defending the D period low now. Basically, defending value, because as a general rule, we especially when we're active intraday, we look to be active to the buy side at or below value, and we define value as the current developing volume point of control. And I look to sell at or above value. So now you're getting to a place where it's more advantageous to sell than it is to buy. If you did nothing else but just that'll already get you in a better place. Keep you from getting trapped at the extremes and at unfair prices. And you can imply that, and you can extrapolate that out to longer time frames, which is why that's why I'm not looking to be long right here, is because I like to play a little bit longer time frame and get a better opportunity. So I think that if I'm patient, that there's a better opportunity to the short side than there is to the long side, because of where I am, of where value is lower. So I'm way above value on a multi-time frame reference. Now I'm a little bit above value on a shorter time frame. So it's not a great place to be long, even though I don't see a reason to be short. Does that make sense? I know that one's typically a more nuanced idea to grasp. And that, what's frustrating about that is that can mean that, you sit there waiting. So I see, Peter, your comment about feeler trades. So when I think feeler trades, I think about somebody who doesn't really have a conviction in a defined trade setup, and they're just putting on contracts to have risk on, and that is almost always a bad idea. Even if the risk is small, like why risk when you don't have a defined? So if there's a reason to be in the trade, have a reason to be in the trade. If you want to just have a feel for something, don't do that with live money. I mean, that's just my perspective. Okay, good question. Would order flow info help fine tune market directions? Yes, it does. It can, well, one, let's just talk about the ES and where it is right now. I've got positive order flow that's increasing. So if for example, if I'm looking for a short, I want to see some dense hitting, or I want to see some divergence. I want to see some strong order flow that's actually not getting higher prices. that can certainly help me in terms of timing when when the potential turn might come. And if I'm long, I want to see that strength hold. Any pullbacks that come back, I want them to be weaker to the sell side than they are to the buy side. And the delta and the order flow, which we realize that there's a number of different ways that we look at order flow. Order flow can just be period volume, right? That's one way. Contract volume at prices. So can I continue to lay down contracts at these higher prices? So now, whereas just a second ago we didn't have a lot of excess, now I've got some potential excess above here, and this bell curve is starting to thin out a little bit. This is even further increasing the risk to the long side if we can't continue to fill out the profile up here. How do we? So okay, does that answer the question about using delta? I mean, I think of delta if you ever traded with things like an AD line. A lot of index traders use AD lines or tick, NICE ticks and stuff like that as an internal to look at what's happening inside the market. Those are really helpful, especially if you're trading indexes. They're not so helpful if you're trading a non-index product. What's really interesting about something like a delta is that is an internal for that specific product. So that's telling you what's happening in the auction of that product. So I actually don't look at I don't look at 80 lines. I mean, I have some on some templates, but they're purely like if you're using Thinkorswim, which does not offer any type of delta, bid-ask delta. You can see I've got like an AD down here and a tick. That's a way that you can use that if you don't have delta, but delta is far more accurate. What's the risk based on example? Yes, prior balance, high volume node, fractal rotations. So no, I don't. Okay, that's a good question. So if I was going to be long based on the narrative and plan of where we are overall, I mean, I would be targeting 3K. This level up here is a high volume node from the prior auction. So now that we're holding and accepting above this high volume node at 29.78, I'm looking for a movement to value here. And this would be what we call an IB extension go with. So meaning that we have IB high extension that's telling you that there's buyers active after the first hour. You're looking to buy at or below value, and you'd be looking to target this move. So in terms of what would you risk? Now, I look to trigger on a smaller time frame, like a 5-minute. These are 5-minute candles and periods here. This is a 30-minute. So I always start with the 30-minute first and then drill down to a 5-minute. So let's look at a 5-minute example. I'm just got to change the time frame here. All right, so this is perfect. This is what we would call where am I? So this 5-minute right here is what we call an order flow spike. Look at the massive buying delta there. So as long as that holds, you could be long anywhere in here. Your risk would be 1 tick below the base of that spike, and then you trail it towards the target. So your risk is somewhere like what, 4 points, and you're looking to make 9. Again, that's not my trade, but that's how I would look at it. Did that answer that question? As far as fractal rotation, so if you're not familiar with fractal rotations, what that's looking at is that there are observed price rotations back and forth for each period. So just like you can look at, there's kind of an average price range for each period. That's what makes this one a real standout. And that's why I don't typically look at the quote unquote fractal rotations. People who are interested in fractal rotations are looking at scalping, and want to do lots and lots and lots of trades. I'm more of an interest, and JP as well. We're interested in developing intraday swing traders. So someone who's looking for 1 to 2 significant moves that they can capture 25% or more of the day's range. Not interested in fractal rotations as a risk management. The other thing that's challenging about fractal rotations is because volatility changes, you have to keep updating those numbers, and that's just more headache. I know that Murad, Futures Trader 71, uses fractals, and he's really great at it. And he's a far more active trader than I am. But that's one of the drawbacks of that, is you have to keep updating those because they change all the time. The other part of it is there's an assumption that you're doing risk management around some kind of fractal rotation, and for that to actually have merit, every participant would have to lean on those. And what typically happens is someone says, well, I set my stop based on that fractal rotation, and then they get taken out, but the trade was still valid. It's because behavior trumps fractals, behavior trumps technicals, behavior trumps fundamentals all day long. But it's a great question. But does that help, Stephen? Where I will say where fractals can be helpful, kind of like, you'll notice on these charts I don't have moving averages, but moving average can be helpful as a way to help smooth price and give you an idea of, is the auction attempting higher? Is it sideways? Like it can help you discern that when you're new to markets. So they're helpful in those ways. Are they useful as quote unquote support and resistance? Only if every market participant used them as support and resistance. Whereas, when I'm looking, I can be objective in my analysis of what's happening right here. Is what's happening today is we had value references lower. What's the auction doing? It's accepting and holding above value higher. So auction participants, all of them in every time frame, are accepting these higher prices so far. I can objectively say that. And there was strength in the buying, so there's some directional conviction. So that's also helped me say, hey, if I want to counter this narrative because I think that we're getting away from value, I need to be very careful because we're doing a really good job so far of continuing to accept higher prices. Okay, question: positive and negative delta represent what exactly? So a negative delta, if you have negative delta, that means that you have selling control. If you have positive delta, then you have buying control. Now, different platforms display it in different ways. In this platform specifically, and this has to do with the specific data feed, but these numbers under each 5-minute period. So this is looking at the difference between trades placed on the bid versus the ask. Okay, so the ask or the offer is the lowest price that I can immediately buy. What's the bid? It's the highest price I can immediately sell. And they're off, they're typically one tick away from each other. And trades are either placed on the ask or the bid. Delta is a way to measure impulsive behavior. There's orders that are executed on those prices. And the difference between those helps me see where is their aggressiveness and impulsiveness in the market. So a strong, buying delta, which in this last 5-minute period here, I had very, strong buying delta, that should lead to higher prices because I had significant buyers stepping in. Now, if I trade right back through this without getting higher prices, what would that tell you? If I had strong buying, but I couldn't get any higher prices, what would that tell you? Yeah, Mark, it could absolutely tell you some exhaustion. The other thing it's going to tell you, well, it means that we've trapped some participants. So it's definitely something to watch. And it's actually a trigger that I like to use for a counter move is something that I call, um, yeah. And Michael, sellers are absorbing those buyers. So the buyers, they're basically sellers waiting for them. And if they can't get follow through, then all of these buyers who are buying above value today and above value from the last week, they're trapped. So then they are likely to be aggressive sellers to get out, and then that can create the excess that we want to, for the move back lower. But that's not that's kind of one of those. If that happens, my expectation is always on impulsive activity is for higher prices, and as long as this thing holds, we'll go higher. That's why you can lean into a level like this as your stop, because you can have higher confidence that will hold. And what it appears like right now is that, after 1 5-minute period of negative delta where, sellers came in, that was basically just profit taking. Now we've got some more buy side delta coming in, and they're trying, they're holding these higher prices. And you can see that the concentration of color here is showing you where the volume is on these 5 minutes. So on a, very even small time frame, they're adding more contracts and volume at these higher prices, which can queue up the opportunity for this to push towards that 29.94 area and 29.97. So those are, like when we look at the 4 questions that we look on putting on a trade, so like what would tell me that I'm right? Well, I'm going to defend the area where the impulsive buying stepped in. Let's say, for example, I want to be long. I'm going to defend that area, and I'm going to find more buyers who are willing to step in as we get higher prices. We should get follow through higher. What should not happen? I should not trade back through the scene of that push before I get higher prices. That would be a clue of, oh, somebody's trapped and I don't want to be trapped. So I'm gonna exit. All right, I'm looking at other questions that were submitted. So this week we've been talking about excess in our development community. Auctions begin in balance and end in excess. So anytime you see an accumulation of volume, that's a form of balance. And then as you see, volume start to wane, you can be leading towards some excess. There's actually some excess overnight. You can see in crude oil as they tapered off. There's actually some downside excess over here, which is why when we came into the plan, we were like, okay, well, I need to see below or above, because right now these excess that exist above and below where we opened, which was right in the middle of that, meant that the auction's waiting for new information. And excess typically will hold until it's traded through. And that's actually why with the soybean trade yesterday, sorry, my mic took a little bit of a break, but yesterday they traded higher and rejected out of that. So what excess allows us to see is behaviorally that the auction attempted in a direction and rejected out of it. So that should hold the auction and lead you to lower prices, which is why if you trade above that, you should get out, because something has changed in the market that you didn't count on. And so that means you should get out and reevaluate. So much clearer. The auction's always clearer when you've defined the trade and then you take the stop that you're supposed to take, because you can always reassess. And it could be the opportunity's still there and I want to look to be back in it. So like with soybeans, the opportunity is still there. We haven't shifted value. Value is still, all the value references are still lower. But I don't have any, I now need to look for new excess to lean on new selling. Today we're establishing value higher than yesterday. You know, we're still inside that overnight range, you know, but maybe we get up here and then we reject back through the open and establish new excess. That would give me an opportunity to re-enter. I could have a stop above, and I, again, looking for that 914 area. All right, NQ's trying to push higher again. Okay, it's done. Okay, shorter term analysis on the notes. Let's go look at the notes. To a different. Well, let's look at this chart. So this is Thinkorswim. You know, I look at a number of different platforms. Now, here's the cool thing is when you have auction mastery, you can look at lots of platforms and you know what you're looking for. When you understand auction behavior, you'll pick indicators of price and volume that are going to help you make the decisions that you want. For example, on this one, this is kind of a standard approach, especially if it's a product I haven't looked at for a while. I like to start here. This is a monthly view. About, you know, it's 20 days, but this doesn't include weekends, so that's basically giving you a monthly. So you can see right now that value. This is the volume histogram for that last month. Value is right here at 130 and 80 hundredths. We're basically trading. We traded right on that earlier. We're pushing lower. A couple other things, you know, of interest. Value for the week is way up here, so we're significantly away from that. So this is kind of similar, you know, opposite to where the equities are doing, is that we're trading, you know, away from near-term value and heading back to long-term value. I would say in the short term, prices lower are going to be suspect, just because you're running out of participants in the nearer term. We've been trending for quite some time, so you know here was a balanced resting market. This is a move. What are we looking for now? Is we're looking for rest. That's the next behavior. So what we're looking for is we're looking for counter behavior that's enough to shut off the downward auction. I have no idea where that's going to be. Now there is a high volume node here that we could look, you know, expect some potential buying to step in. That comes from all the way back here. That's actually a prior weekly point of control, meaning that that's, you know, several sessions of value. Those are stickier than one session. I am also noticing, so these are what we call a volume, equivolume bars. So the width of the bar, the 30-minute bar, tells you the volume. Well, so where were the standout periods recently? There's one here. There's one here. This shut off the upward auction. See this how strong this one is and this one, and then that kind of took us into balance. Now we've had some strong selling volume until we see strong buying volume. That's kind of like in this. The movement is, you know, to the downside. So in short time, what I'd be looking for in the notes is I'd look for some counter, what we call responsive activity, to shut off the downward auction, and then establish a range of price that we would, you know, kind of rotate back and forth. And but until you have that, I don't have it. So I look for some buyers to step in. That does not mean buy it. It means wait, because that could just be profit taking from this recent slide. So I'd look for them to, you know, buy and maybe hold for a little bit, and then that could establish a range of price that you could, you know, potentially trade the rotations around. And again, I mean, that's just an overall narrative of what I'd be kind of looking for in the notes. You'd be then looking to express a specific setup around that. Now, other things that are on this chart that I think are wise to have. So these are all of these. You may think these are Bollinger Bands. They're not Bollinger Bands. This is a monthly VWAP, 2 standard deviations. So this is the monthly VWAP. So we're trading below monthly VWAP. This purple is weekly VWAP, and we're actually hugging. You can see we're down here hugging 2 standard deviations of both monthly and weekly VWAP. So I definitely think, it's dangerous to be short. This is where I meant those algos can kick back in. And first target to the upside would be 130. If they 08, if they get above that, then they could move back toward 131.030. I like to see confluence, just like within volume at price. I like to see confluence across multiple timeframes to identify the really, really key levels. VWAP, especially if you want to see where the algos are active in the markets, looking across multiple timeframes of VWAP is also helpful. I mean, just notice like when they came off at 2 standard deviations up here, where do they trade back to? They trade back to monthly VWAP. They hung around here. That's where the break really was, below this monthly volume area. So I'm seeing lots of confluence around, volume weighted average prices and the volume profile. And then the little red dot, that's the current session VWAP. So we're just there. I mean, they're doing a good job of moving lower. I'm waiting for them to kick back sometime soon. So if you're short, I'd be looking to peel it off and protect the shorts. Absolutely. Yeah, of course, we're always looking. Just waiting to see how the market reacts to key areas. That's right. Yeah, I mean, in any trade plan, an area, I have expectations of how an auction will behave at a certain price, but I'm going to wait until it gets that price to see if it behaves there. So like, it's been interesting this morning. We expected the auction to pause in the NASDAQ when it got to around, 96, 78, 96. And that's exactly what we did. We now traded, above and below that and around it for about an hour now. So we're definitely re-engaging those participants as expected. So that's good. And looks like crude didn't get us a pullback. So let's go back over here to crude real quick. It's got about 4 minutes left. If anybody has any additional questions that you want to make sure that we get to. So crude is up here to 54.60, still inside of overnight range. But if they get to 54.60, so I think there is an opportunity now that they didn't give us the opportunity to go with them. So we wanted the pullback to value to go long. They didn't give us that. So now what I'm going to look to is potentially fade this. So I'll look for some failure somewhere up in here, and I'm going to target back towards 54. So that's going to be so long as value stays down here, which you can see, how much more time would they have to do at these higher prices to migrate value higher? They'd have to trade sideways for quite a bit to do that. I mean, the NASDAQ has traded sideways here for an hour and value is still 15 points lower. But still a good chance they're going to take out that overnight high. So good to potentially wait for them to get above the overnight high and then look and see if we can get some failure. I actually like that. That'd be some pretty decent opportunity. But I definitely want to see some failure. And when we talk about failure, what are some of the first kinks in that? Like, here's a really big delta number here at 54.46. I want to see us trade back through that. When you have big delta numbers like this, where aggressive buyers, if I can trade back through that, then I can put some pressure on some of those buyers, and that can change hands in the auction. So that'd be kind of the first clue, is trading back through some of those levels, or making a lower low on a longer time frame, like a 30-minute, and leaning on stuff like that is what you're looking for. All right. Okay, we got 1 minute. Great questions. Thanks, guys. We're going to jump off here. But before we go, For those of you who are part of the community, we'll see you next week. We're going to be talking about value migration and how that's predictive of price. But if you've not done a week with us, encourage you to do that. I know there's lots of places that you can go for your trading development. We give everybody a free chance to see if we're a fit. It's about 5 hours of discussion and tools that you can participate with. Be sure to be following us on Twitter for some ES charts every morning. Also on Facebook. And if you're just like, hey, I think I just need a little bit of help. I'd love some ideas on what I could do to develop further. You can always send us an email or give us a call, and we can set up a free conversation because we'd really like to help you at least succeed where you can. That's it. Have a fantastic weekend, and we'll see what the trade news brings us, and hopefully we'll have some decent trade. That's what we're looking for. Get past the trade stuff, and then we'll have a couple weeks before FOMC that should have pretty good trading opportunities. Very good. All right, everybody. We'll get this recording out either later this afternoon or tomorrow morning, and we'll talk to you soon.